Hi, this is Mark Item with HONU Trading for the weekly review for the week of June 26, 2023. First of all, a disclaimer, educational purposes only. Know your time frame and risk tolerance. Never forget that our primary job is risk management. Follow me on Twitter, @HONU Management, @HONU And if you find this valuable, take a moment to like and subscribe. So the bull needs a nap after a hard 3-week one, breaking out above that long-term resistance level of 420. So it's snoozing a bit this week. The market knows all the bricks in the wall. We've talked about this for the last few weeks, all the wall of worry, the Fed, inflation, possible recession, yada, yada, yada. Well, there was a curveball late Friday and over the weekend. And what happened in Russia? And what the heck was that? We'll find out market reaction here in a few minutes. I'm recording this about 20 minutes before futures open on Sunday. So we'll take a look at the holiday weekend review. The biggies took another week off, but unfortunately, the smalls did worse. Probably back to risk on. Financials, the last time I did one of these a couple of weeks ago, we were crawled out of the edge of the woods into the meadow. Not so much. So in honor of our recent trip to Yellowstone Park, I'm going to substitute a snoozing bison for a snoozing bull this week. And let's take a look at the bigger picture. So this is a weekly chart of SPY. And even though we had a down week, it's an inside week. And what I mean by that is the previous week's low and the previous week's high completely contain all the price action in this holiday shortened week. Our RSI is still above the 60 level, which leads to a bull phase. Our 10-week moving average is rising, stacked above the AVWAP from the all-time high, which is now slightly rising, stacked above the 30-week moving average, which is also rising. So not any cause for concern yet. If we zoom in a bit to the daily, these are the August 22 highs that were somewhat evident back here. And we basically broke out above that. And then this week, Tuesday, Wednesday, Thursday, Friday, just pulled back to that level. Our RSI broke out of the bull range sometime before price actually did. And then it's now just pulled back to that level. So the August 22 highs, we've had 4 down days in a row, but our moving averages are all stacked in the correct order. 8 over 21, over 50, over 20, over 200, and the all-time high AVWAP is now again slightly rising on a daily time frame. So if we look at what happened during the week, it's kind of a whack-a-rally week. Anytime we got a rally, drop down, come back, whack. Drop down, come back, whack. Rally back, drop down, come back on the next morning, whack. Rally, whack. So instead of whack-a-mole, I'll call this whack-a-rally week. Now, the other thing that was kind of weird is the breadth. And this is your net new highs versus new lows according to IBD. The SPY was down 1.42% for the week, but Tuesday, a down day, we were plus 72. Wednesday, a down day, also plus 71. So Thursday was an up day, but we went to -3. Friday was a down day, -38. If you can make sense out of that, you're doing better than I am. At this point in time, I'd say the bear is still sleeping on the table, but there is a little bit of cause for concern. This is our relative strength, equal weighted S&P 500 versus SPY. Rally has given most of that back. MDY versus SPY, same situation. IWM, the smalls versus SPY, same situation. But the QQQ equal weighted versus the cap weighted Q, that had a tepid rally and has been falling ever since. No danger signs yet, but that isn't something you'd see with a bullish environment. The heat map for the week, again, the biggies took the week off. Apple and Tesla virtually unchanged. Amazon and Meta were the only two that were up, offset by Google, Nvidia, and a negative 4% week from Microsoft. Turning to our risk on, risk off indicator, again, hat tip to Chris at Chavaco Capital. This is the S&P 1500 relative strength versus 3 to 7 year treasury bonds. So if this is rising, investors are more interested in stock. If it's falling, investors are more interested in bonds. So we have had long periods of time where this goes sideways, but when it is in a sharp downtrend like the COVID crash, that is clearly a risk-off environment. When it's sharply rising, like the rest of 2020 into early or to late 2021, that's clearly a risk-on environment. 2022, risk-off, moving a little bit higher, but nothing until recently. And even despite the pullback, hasn't given much of that back. So I'd put this one as a firm cap in the feather of the bulls. Financials, if I look at XLF on a daily basis, we had a lower high before Silicon Valley Bank failed. We broke into this 30-31 level, which is support going back all the way to the great financial crisis when it was resistance. We had a dangerous low. We had another lower high, then a higher low outside that danger zone, another higher low, and then took out both higher highs. And then is this oops, because it's given most of it back. Now, if we take out Visa, which had an up week, it was one of the few that had an up week. So if I go back to the financials here, JP Morgan, Bank of America, all your banks are down. Visa up 1.5, MasterCard up a little bit. Other than that, the financials are pretty red. So Visa and MasterCard are the number 2 and 3 components in the XLF. So barring that, this would have even been worse. If I look at the big banks, same thing, lower high, lower low, lower high, lower low, higher highs, took out 2 of those, and I was given almost all of that back. No bueno. Our RSI slightly broke above the green zone, but it couldn't stay there, and is now back threatening the bear zone. The small banks, KRE, Rutro, same concept, but actually has given up more. If we look at earnings next week, there's just a few. General Mills, Micron, Paychex, McKesson, Nike, and Constellation Brands. Other than that, pretty light week. So to sum up, the bull took a nap this week after a hard 3-week run above that 420 level. We'll see what happens with the market's reaction to whatever the heck that was in Russia. Took a look at the week in review. Biggies took the week off, but the smalls gave it up more. Risk on is still intact, and the financials started giving it back some too. So as my buddy HONU always says, small losers win.